Hey, this is Sasha. Thank you so much for joining me in today's video. What we want to talk today about is probabilities and why trading options sometimes is way better than just swing trading or day trading, especially if you're interested in looking at the probabilities behind an occurrence. So let's take a look at this. I'll show you how to set up a trade based on probabilities, give you some thoughts and takes on buying stocks even below their current price. So stay tuned. We're going to cover this right now. All right, so a lot of times when you're looking to get into a trade, let's say a stock is down 10%, 20%, 30%, and you say, hey, I'm interested in buying it right here, right now. Well, in that case, you could go ahead and buy it, but the stock could continue to head lower. So in this case, you really don't know if you're going to make or lose money. There's no specific formula. There's nothing that states, hey, you're going to have a 60% chance of success or a 90% chance of success. But if you're trading options, you actually do have those numbers. So take, for example, if I went ahead and said, hey, there's probabilities involved in this. And what if I said you had a 30% chance or a 30% probability that this trade is going to work out and you'll go ahead and make $360? Hey, that sounds pretty good. Well, what if I said you had a 60% probability or chance that this trade is going to work out, but you're not going to make as much because, hey, we're giving you the probabilities in your favor. So let's say now you'll only make $220. Okay, well, let's say you weren't happy with the 60% chance or probability. You said, hey, I don't like those odds. I'm still worried. I'm still concerned. So what if I said, hey, you could have a 90% chance of success, but you'll only make $95? Well, where do you stand? And this is the cool thing when it comes to options is that for some people, they say, hey, I'm good with the 30% chance. I want to make more money. Other people say, hey, I like the 60%. I want to make more money. And for you, if you're maybe retired, you want a way higher probability or chance of success, but you're okay with a lower return. And this is the cool thing with options and what you can do. So take, for example, right here, when I go in and look at probabilities. Here's a probability in the money. And here we go with, let's say, probability of out of the money, just to keep it simple for you. Now, these probabilities don't always line up perfectly because it depends also on volatility. So even though sometimes it says 100% chance, it doesn't necessarily mean 100% chance. It just means overall in the options world, hey, you got a pretty good chance. Okay, and this is based on a lot of factors and formulas, so I don't want to bog you down in this video regarding that. But if we take a look at looking at something like a Starbucks, and I look at this Starbucks stock is down quite a lot, and you say, hey, what if I could get this stock cheaper? Well, what could I do? Well, I could go ahead and say, here we go on Starbucks, pull it up, and I could say, hey, the probability of something being out of the money, in this case, I could go ahead and sell kind of a put at 45. Well, current price is 50, so that's still $5 lower from where it is. I'll go ahead, we could sell a single, and this is called a cash secured put because you have to have the cash in your account if you get assigned, right? So you could sell this put, and if the stock stands still, you make money. If it stands still, you make $525 at expiration. If it moves up, you could still make that amount. If it moves down, as long as it's above 45, you still make $525. Now, if it goes below, let's say it hits 35, you'll get assigned shares at 45. So what could I do to protect myself? Well, here's an interesting thought. Why don't I go ahead and buy some protection at 40, just in case if it keeps going down to 0 and I'm worried about the end of the world, I could go ahead and buy some protection, and now I went ahead and reduced that risk. So in order to buy that protection, that cost me something. So now I could make $105, but my downside risk is limited to $395. So this is one way to set up some spreads and some ideas, but again, the odds at 45 going 58 days is still 52%. What if I wasn't happy with that? What if I want a higher percent? Well, I could go to 37 or 35, but I make less, right? I make less money because I'm a seller, because we're talking about selling a vertical. So let me go ahead and say, I want to be more protected. So I'll go to the 35 here, and I could go to the 30 over here. And let's see how this pans out. Let's see, sell, let's go 37.5 and maybe 32.5. There we go. So that's a little bit better. So now what it's doing is, okay, well now in this case, you're not making 110, you're making about 47. But you've got much more wiggle room. You've got an extra 5 to 7 points further downside. So that's ultimately what you're doing. Now, could you put this in as a single order? Yes, you could. You could go ahead and sell a vertical right here. And now you've got one order. In this case, you go ahead and make $77. If I bring this out further, let's say we go 45 and this one 42.5. Well, I would only make $55 because I'm wider. And if I go with even wider, okay, let's say we go from 42.5 to 40. Now I'm only making, well, the option spreads are a little funky right now just because we've got a major downward market. But you're ultimately making a little bit less in theory. So usually the one that's closest, you'll make a little bit more, 76 cents. And as you go further out, you make a little less. So in this case, $55, but you're safer. So this is what you're looking at when it comes to creating this trade. And you can do this on any stock. If I go ahead and do this on McDonald's, it's the same concept. So if I go in and sell a vertical right here and look at this spread, you can see right there being close and tight, I would make $185 at expiration. If I go further out, okay, current price is 126. If I go an extra 5 points out, and I go 115 and this is 110, okay, or even a little further out. Now I make $140, okay, so take a look at that. So I make 140, but I'm wider. And I could continue this process here and maybe go 100 and let's say, let's see if we can do it. Maybe 105 and 100. Nope, it's not pulling up just because we're getting really wide right here with the volatility. But you can see right here, tighter, I'm making 185, more wider, I'm making 145. So I got extra room, but you make less money. There's no give-me's in the market. It's a give and take relationship. And that's the power behind options, is you could go even further out and get these stocks even lower at 110. Because if you look at McDonald's right here and we pull it up, look at that sell-off in a big way. And now we could get it kind of at 110 even, which is another maybe 10% lower than where it is now. So think about those things. If you like this type of videos and content, definitely check out our website at tradersfly.com. You can also see some of our products and courses. Just go to the products courses area, and that'll take you to our major website where we have all our courses. That'll be on the Rise to Learn website. And you can see all of the great option courses that we have available there. Thank you so much for joining me. Remember to hit the subscribe button if you're new. And don't forget to join the newsletter list as well so you get notified as we release other great goodies, live classes and training on our website and on YouTube as well. Thanks again, and I will see you next time.